So welcome everybody that was unable to come on this past Monday. It's now May 13th, 2016. And what I'm doing today is interviewing Dan Martell, the new portfolio manager for the Scarab Global All Cap Fund, as a review of the first quarter. And also kind of a first-time introduction so that you get to meet this person we're very fortunate to have as part of our team now. Dan Martell had his own trading company, had decades of experience of working with public companies and also commodities. Has managed hundreds of millions of dollars, also for a large Canadian bank, and really kind of came out of retirement because to help us, because he sees a real opportunity in the sustainability space, a way to add value both financially and socially and environmentally, something that he is very keen to do. So with that, I'm going to introduce Dan. He can give us maybe a 10-minute overview of what happened in the first quarter, what he was attempting to do, what he succeeded in doing, and the challenges that he's facing in a very interesting market this year. So Dan, with that, please go ahead, and I might interrupt you and ask you some questions after a
Great.
while.
Fine. Thanks, Ben. I just want to start. I think obviously at the first of the year, we went through started a period of really tremendous decline. I think the market had the worst start of a year probably in its history. I think during the time period, according to different calculations, most everybody's portfolios were down somewhere between 8 and 12% running into the middle of February, and we experienced the same thing. At that time, I think the market was influenced by a lot of factors, but the biggest factor was probably the energy market, which really had the whole world marketplace concerned, and it was really shaking people up badly. But I think the way we saw it was that there wasn't much we could do about the market when it was falling like that, but the key thing was that when we felt like there was some stability beginning to come back in, what it had done for us was that it created some tremendous opportunities to get into areas that we feel that the mission of Scarab is really very much dedicated to, in this case, alternative energy. And because of the way the market had been driven down by basically crude oil, that had also really drawn back the value of a lot of alternative energy stocks that we think are very appropriate. So the opportunity it gave for us was kind of unique. We had a chance to come in and buy stocks that were very attractively priced, and we had some capital and room to do that. And as the market recovered, the portfolio recovered very well with it. And we also invested in financial stocks which had been beaten down basically with concern about the same variable. And therefore, from the probably middle of February through probably sometime in late April, the recovery went great. We ended up going positive for the year, and we're really trading pretty much in line with what the S&P 500 was doing, which, given the mandate that we have and the number of small stocks and the micro stocks we have, that's a very good benchmark for us to be able to compare with. But since that time, things have basically bounced along. We had some small rallies and some small breaks, and we're probably sitting at a time right now. Today was probably the end of a difficult week, but I think that when you have periods of time that crude oil rallied to a $45 price or a bit more, and the market stalled out, we had a lot of resistance, and now we're trying to find some new direction. And I think the key now is that we just have to be patient and go back to what I consider to be our discipline. And when I say that, what I mean is that a lot of the changes we made during the first quarter were ones that really reduced the volatility of the portfolio. We trimmed off a lot of stocks that we felt were we had a bit too much allocation towards. We added some new stocks to broaden out the diversification, invested in some new areas like pharmaceuticals and some robotics and so forth, and then some more alternative energy, which I thought gave the portfolio a much broader diversification and less concentration. And I think that's led to a more steady return over the last few months. As far as the future goes, I think the key thing here gets back to what I mentioned before, discipline. You listen to people talk, I think that I find it frustrating when people don't make the distinction between investors and traders. Often the TV shows that are on and the dialogue people hear is really trader talk. That's short-term talk. It's trying to guess where the market will be next week or the next 2 months. We have to respect that, and we follow that closely. I spent probably more of my career on the trading side than the investment side, but for our portfolio, the key is that we keep focused on what our long-term strategy is and what the market is saying for the next year or more. And I think that we're in a time period now where I don't see tremendous upside potential in the market. I don't see much downside either. And so I think the key is that we maintain our discipline, we stay diversified, we look for opportunities to buy quality stocks that fit our mandate on the week in place. But in general, we wait for the next trends to develop. And so it's not interesting or exciting to talk about, but I think it's prudent in the kind of market we're in now that we've had a lot of turbulence. We've gotten the market back on even keel, and that we just have to continue to execute our strategy, which is to look for opportunities, to be well diversified, and not to try to get too caught up in the emotions of short-term market thinking.
So, Dan, I want to just interrupt you for a second, because when you came in to the portfolio, there were a number of positions that were what is called overweighted. So instead of having stocks with, say, 8% of the portfolio or 5% of the portfolio, maybe you could talk about, when you say diversification, you really mean it. You've worked hard to trim back some of those bigger positions, even if they were doing well, in order to reduce the ups and downs, the volatility of the portfolio. Could you say a little more about that?
Yeah, no, that's true. Is if you go back and look at individual stocks and how they were allocated, this is not to say that often, people like to have a portfolio that is very highly concentrated, because if you're right, if you've chosen the right stocks, you get tremendous returns from that. But you also expose yourself to a lot more volatility. And so the portfolio had a number of excellent stocks in it, but we had an opportunity as the year progressed to really reduce the market exposure to certain sectors, so that you didn't find that if one or two stocks got hurt, the whole portfolio was hurt too much. One area where we couldn't really do that particularly well was in the solar stocks, where we had a couple solar stocks that I think very much fit into the mandate of the portfolio, but they hit a period of time because of government regulation changes and some other problems that sector was hurt badly, and the portfolio was hurt by that, and that the goal was to gradually begin to reduce some of the portfolio exposure in that sector. So we still own some of those stocks. We've just reduced the percentages that those stocks represent of the portfolio. So for instance, they went from a 5% impact to probably 1.5 to less than 2% impact. So it was a question of smoothing out some of that information. And I think solar was a good example of where it was a case where we like to support that industry, but we also have to control the volatility of the portfolio by reducing the number of shares that we have within that one sector.
So one of the things I wanted to highlight is what a great experience it's been for me to work with you in terms of also the mandate of the portfolio. This isn't something that you've done particularly in the past, but you came because you wanted to have a positive impact. And So some of the things you've mentioned, financials, pharmaceuticals, even robotics. Some people in our some of our clients might be wondering, have we completely lost our direction in terms of mission? And I just want to reassure everyone that we're maintaining our focus using the natural steps. So, for example, in the pharmaceutical area, it was a serious question for me whether or not to invest in Novozyme. But when you're dealing with diabetes, and insulin is a chemical compound that does occur in the human body, they're packaging insulin in different ways and allowing people to stay healthy and balanced. I made the decision that that's a kind of pharmaceutical that we can invest in. Similarly, with the financials, if that was a red flag for you, I just wanted to say, we looked at, in the financial area where the ideal is community. So we're looking at regional banks, small banks that are helping small businesses locally. Robotics is another area. Maybe you could speak to that a little bit.
I think the robotics is interesting, and I think it kind of reflects the whole process. I believe I've only been involved in the social responsible sector for about a year, and I came over to it because having spent my time really not particularly focusing on that, I'm really happy to be involved with Ben in the process of investing in a way that I feel proud of. And I'm really pleased that I can take part in the process, and it's been a real interesting opportunity because we went into a new area like robotics where I noticed the portfolio hadn't really moved into that area. And I thought that, my responsibility was to bring to Ben's ideas and stocks that I thought represented good investment opportunities within that sector. And then, I looked to Ben to provide the guidance as to whether or not this follows the mandate that he wants this portfolio to represent. And robotics, I think, is a particularly challenging area because the social responsible aspects to it, I think, are very much in debate. There's no literature out there that I could find that discusses this. It's going to become a bigger deal down the road, and I think that we want this fund to be a leader in trying to determine where the most advantageous socially responsible investments are. And so if there are good pharmaceuticals out there that are being responsible, then we hope to find them and invest in them. There are many areas like that we look at where we're trying to find the best players. We found a real estate investment trust company that we thought really reflected a really great social responsible mandate to it, and we invested in that, and it turned out exceptionally well. So the goal is to continue to look to diversify the portfolio, find companies, and then I sort of try and twist Ben's arm to kind of give me the opportunity, and he applies his standard to what he believes the portfolio should be representing. And that has been the give and take. That's really been, I think, very productive. And anyone who has any thoughts about robotics or wants to weigh in on that, we'd love to hear that because this is an evolving part of it. So we invest. There's also an education and evolving understanding of what social responsibility means. And I think that we are on the cutting edge of that. And I think that's exciting. I think that's where we want to see ourselves.
We live in a time when large companies, public companies, are not spending very much on research and development. It's just a fact. Most of the money of the S&P 500 goes back into buying shares and basically benefiting the management. And it's a very different world than it was 20 years ago when a good portion of the budget went into research and development. And I'm saying that because a lot of innovation now is coming out of the military. That's where, unfortunately, a lot of, grants and entrepreneurs are getting money from the Defense Department to develop, sustainable solutions. And so they might also have a military application. And that's where you have to really, particularly in the robotics area, have to be careful. So Just to switch the conversation slightly for the last few minutes, could you say a bit about other ways that you're going to be reducing risk in the portfolio? I think we
Well, a couple opportunities I think exist that we haven't been doing up till this time that we're researching and about to roll out. Really has to do with the using the options market more. People tend to be a little afraid of options because they don't quite understand it. They think it's a little bit it's an unknown, but because we have a long-only portfolio, I think that the idea of adding into the portfolio a covered call writing program, which is a very conservative opportunity to take additional return out of stocks that we own and that we can generate some additional value to by doing that. And secondly, I think we're exploring an opportunity to invest more in options which will give us some downside protection so that the market were to take a tumble to the downside again, we would have bought what amounts to insurance on the portfolio through the options market, and so that we can mitigate some of the downside risk to it. So the idea is to almost put collars around the market where we do take opportunities to the upside, and we also protect from downside risk by wrapping this around to again, the goal being to maintain a really strong risk return and impact goal in mind. And we do that by using the various techniques available to us. So it's a combination of diversification, some options trading, and just basically following our discipline and not getting outside of the normal risk parameters we think are prudent for this portfolio.
Well, thank you, Dan. I just want to say one more time how grateful I am to have your expertise responsible for Scarab Global All Cap Fund. We, all have other new partners in our other funds that are helping us out, and I think it's an important thing for us to be a leader not only in our standards for social responsibility and impact, but also to be leaders in terms of financial expertise and risk management. So thank you for being part of this, and we'll be doing another call at the end of this quarter.
Great.
Thanks a lot. Bye-bye.
Thank you, man. Good night.